talk to you on this series of tax deduction at source. So the way we will do is let's first discuss whatever I have to discuss, and then we will open up at the end of the presentation about 10 to 15 minutes for Q&A. So everyone can feel free to throw your questions, and I'll do my best to answer them. So of the TDS series, session 1, we'll talk about two things. We'll talk about the general aspects, and then we'll talk about salaries. When it comes to general aspects, we'll be talking about what is the concepts of TDS, how you can go about deducting the tax at source, and a little nitty-gritties as well as to how you go about, or the modus operandi, how the TDS is entirely done. A note of caution, I would say, certain aspects that I will be discussing under the general aspects may be very trivial, maybe because in the larger audience, I think we will have both novice as well as experts. So for experts, it might look very trivial, but please bear with me. In the general interest of the audience, I'm also talking about a very little basic concept as well. So now, before we really get into tax deduction at source or tax collection at source, TDS or TCS, we should understand certain basic concepts. One, when is a tax payable by a taxpayer? So normally the income of a particular year is taxed in the subsequent year. Well, let's see what are the provisions of the Act. So what we do, currently we are in financial year 2022-23. So what do? A lot of transaction happens in our business. These transactions culminate into either a profit or loss at the end of the year. And there could be other sources of income as well. And all put together, we determine what is the total income. The process of determination of total income and determining what is the tax liability technically happens after the close of the financial year. The process of that determination is what is termed as assessment in the language of income tax. So when is that done? That is done in the year after the close of the financial year. That year in which the tax is assessed is technically called the assessment year. So for the financial year 2022-23, where we are currently, the income is determined, the tax liability is determined, and the income tax return is paid in the assessment year, which is the following year, which is 2022-23. So for the assessment year 2022-23, what is the income that is determined? Actually, the income of the year prior to the, or the income of the year previous to the assessment year is what is taken into consideration. So the year prior to the assessment year is called the previous year in the terms of income tax. So for all practical purposes, the financial year and the previous year is one and the same. So the financial year 2022-23, assessment year is 2023-24, the previous year is 2022-23. The reason I am bringing this to you at this point in time is because it might be very trivial for many of the persons who are already working on income tax or who have got used to paying tax. The reason is we have practically seen that many of the taxpayers commit a mistake in determining what is assessment year. All the forms in the income tax challan, all the tax paying forms or challan or the income tax return by itself will only carry the assessment year. It will not have any term as a financial year, and most likely it will not also have the previous year in it. It will always have the assessment year. So what happens many times, we have noticed that the taxpayer, in the place of financial year, they will put an assessment year. So in the place of financial year 2022-23, they will take 2023-24 and put it. Or other thing mistake also is possible. People commit that when they say the previous year, obviously no mistake on their part by the English language. Previous year means the year before the current year. So they take 2021-22. So all forms are addresses only assessment year, and that's why I wanted to give a word of caution in this. And why am I talking about it in the TDS section? Because all your TDS salon, or whenever you deduct TDS, remit TDS, file your TDS statements, everywhere you will have the assessment year. Remember, for the current year, which is in income tax the previous year, the assessment year is 2023-24. So please bear this in mind as we progress. So now, as I told you, the financial year, for the financial year 2022-23, which is the previous year, the income is assessed in the assessment year, which is 2023-24. So is that the only year where income tax is collected by the government? The answer to this is no. The government obviously cannot wait till the end of the year, make an assessment, and then collect taxes. So they have coined different modes in which income tax can be collected, or the taxpayer needs to pay taxes. What are those? The first and the foremost is the self-assessment tax. What is the self-assessment tax? So as I told you, in the assessment year, that is after the end of the financial year or the end of the previous year, you calculate your total income. Obviously, you prepare your books of accounts, you prepare your profit and loss statement, and the profit and loss account and the balance sheet, and then you know what is the total income. Based on that, you determine what is the taxable income, and then you pay tax on that. When the taxpayer determines his income on his own, determines the tax liability on his own, and makes the tax payment on his own, that is called self-assessment tax. So I am a taxpayer, I make a assessment on myself, and that's why it is called self-assessment tax, and you pay that at the time of filing your income tax return. But that's not the only time you pay income tax. So what are the other modes? There are two other modes. The next one is the advance tax. So your entire tax liability is paid over a period of 4 quarters. So you have quarter 1, that is April to June, quarter 2, that is July to September, then October to December, then Jan to March. So the total tax liability is spread over these 4 quarters and paid in, which is called advance tax or installment of tax, and they are normally paid close to the end of the quarter. So for the first quarter, which closes on 30th of June, the tax is paid on 15th of June. So likewise for other quarters, it is 15th of September, then 15th of December, and then 15th of March. So by virtue of the provisions of income tax, you are expected to pay the entire tax liability by means of advance tax. So which is not paid in 4 installments. The third source of income tax collection is what is the subject of discussion for our series, which is tax deduction at source or tax collection at source. What is this? The tax is collected or deducted at the source of the transaction. So what does it mean? When a transaction happens, the transaction could be a sale, a transaction could be a purchase, transaction could be availing some services, and a payment of that at the very commencement of the transaction of payment or whatever is defined in the law, tax is deducted. So this is the third source. However, compared to an self-assessment or an advance tax, where tax is generally, when the entire tax is paid in 4 installments or one in the case of self-assessment, tax deducted at source and tax collected at source is a minuscule portion of the payment or receipt that is deducted by the payer or the recipient, as the case may be, which we will discuss. A small portion is collected, and then we'll see what happens next. So there are these are the three sources: self-assessment tax, advance tax, TDS, and TCS. And in the case of TDS, there is also an other reasons by TCS, whereas self-assessment tax and advance tax, the objective is straightforward collection of tax payable by the taxpayer. TDS, TCS also comes with another motive. The motive is the moment tax is deducted or collected, and this amount is remitted and a return is filed, we will discuss in detail. This information is passed on to the income tax department. So the moment this information is passed on to the income tax department, now they have an information as to who has earned what kind of income, and that enables the income tax department to make an assessment of the income that has been earned by a person who has received the money. And in case a person on whom TDS is deducted or TCS is collected does not file a return, the income tax department will be able to go behind them and collect tax on whatever income they have earned. Now, to put it in a layman's term on what is TDS, let's take a case. So in the case of tax deducted at source, you have a payer. To whom he will pay? He will pay to a recipient. So there's a payer. When will he make a payment? He could make a payment on purchase of material or availing certain services. Services could be like consulting services. They take consulting services from an architect or an engineer, a chartered accountant or a cost accountant. So they take a service, or they purchase goods, or they pay for certain expenses, something like your rent or interest. All these things, when the payer pays the money to the recipient, what he does, he cuts a portion of the payment, and that portion is tax deducted at source. On the other hand, when there is a seller and he sells his goods to the buyer, and then he collects money, what he does, he adds a portion which is called tax collection at source. The example for TDS could be, as I already said, it could be your salaries, it could be interest paid, it could be consultancy charges, it could be rent paid. When it comes to TCS, when a seller is collecting, very typical and practical example which most of us would have seen is when you purchase a car for more than 10 lakh rupees. 1% is collected over and above the price of the car as TCS. So a very typical example where a seller collects an extra money from a buyer and remits it. So if you look at in both TDS as well as TCS, the portion which is deducted or collected is very small. However, the moment, let's take the case of TCS, a moment a seller of a car collects a percentage and deposits in the name of the buyer, the department is now aware of the fact that the buyer has procured or purchased the car for more than 10 lakhs, which also will give an idea to the department that this person is capable of earning so much amount of money, and that's how he has purchased the car, and they can go behind that buyer and ensure that he files the income tax. This is the objective which is not explicitly defined in the income tax, but that's the motive of the TDS and TCS provisions as well. Okay, now what are the payments on which TDS has deducted? There are about 33 items of payment or income on which TDS is applicable. Are we going to look at all the 33? The answer is no. The reason is not all pertains to all the audience that's there in this. So what are the provisions that we will be discussing will be what is very commonly applicable to majority of us. So for instance, most of us will pay salaries. Most of our businessmen, or rather all businessmen will pay salaries because they employ people. Most of us will pay rent. Most of the taxpayers will pay interest. Most of them will hire consultants. So we will be discussing on those items which are very common and very important in the overall business that happens. And when it comes to TCS, tax collection and source, there are 14 items of receipts on which TCS is collected. But again, we will just be discussing about a couple of them. The reason behind it, TCS all started with kind of agriculture products like tendu leaves and timber. I'm sure not many of us deal with them. So we'll stick to provisions like the 206 H1C, which is the recent one addition. And we'll also discuss about what is more critical from the regular cycle of business. Now, getting into details of TDS. So, all when you look at TDS, generally you can look at these 4 parameters to determine whether TDS is applicable, and if so, what is the rate and what is the when do you go about making the deductions. The first and the foremost is who is making the payment, who is responsible for deducting TDS. A person making payment will be one who will be responsible for deducting tax, TDS. So I avail a set of services, I avail a good, I purchase a good, and I make a payment. Then I am responsible for deducting tax. This is the case of TDS. TCS is just opposite. We will talk about it in more detail when we come to TCS provision. But as I previously said, TCS is a person who collects money will deduct. Whereas when it comes to TDS, a person who makes the payment will deduct TDS. And on what will he deduct? So how do you determine whether a certain payment is subject to the provisions of TDS or a certain payment is liable for tax deduction? Should I deduct tax? So this is how we'll have to look at it. The payment that we make, is it an income in the hands of the recipient? Is it an income in the hands of the person who is receiving it? Let's take an example of salary. So you are going to make a payment as an employer. The person who is receiving an employee, is it an income for him? Yes, it is an income for him, which is taxable under the income tax provision. So it's a salary income. So TDS is applicable. Let's take another example of rent. You are going to pay rent to your landlord. So is it an income that is taxable in income tax? Yes. Any person who receives income, they are subject to income tax under house property, or if it is a commercial entity, maybe in some cases it could be income from business. So if it is an income, then it is subject to tax. Another example, you hire a professional, maybe a consultant, an architect, an engineer, and then he is not your employee, but then you make a payment for the consulting charges. Is it an income in his hand? The answer is yes. And if so, then when you make a payment, it is liable to be deducted tax at source. The third parameter is when do you deduct the tax? So as per law, you are liable to deduct tax at payment or credit, whichever is earlier. Let me explain what it is. Payment is very simple. You make a payment today. I'll have to deduct TDS today, and that's my liability to deduct. What is credit then? So there is always a possibility that I get an invoice from a consultant, or I get an invoice for some services. I recognize that in the books of accounts. So that particularly people who are following mercantile system of accounting or accrual basis of accounting, they recognize that in the books of accounting. What does it mean? So I recognize the expenses, I debit my expenses, and I credit the party as it's an amount payable to that party or the recipient. Then it becomes a credit. Though I have not made a payment, I have made a credit in my books of account. The day the amount is credited in the books of account, I am liable to deduct tax at source. So TDS is always, unless specifically mentioned, it is always payment or credit, whichever is earlier. The exception is, as I said, most of the cases is payment or credit, but if there is an exception is specifically mentioned in the provision. The very good example for exception is salaries. Salaries, it's only on payment. So only when you make a payment, you are liable to deduct TDS. You don't have to deduct TDS unless it is paid. All other cases, payment or credit, whichever is earlier. The next question is, how much? The good thing about TDS is, in all the provisions and all aspects of payment, a specific rate has been defined. A rate has been specified. So it starts at 0.1%. So it could be 0.1% or 1%, 2%. It could be 5, 10%. So the percentage is specified, except, again, I'll come back to exception. Salary is an exception. So, and payments to NRA is again an exception. Otherwise, it is always specified. So suppose you pay 1 lakh rupees and you pay it on account of consulting charges. So consulting charges comes under 194J. Then depending upon technical or other consulting charges, to determine, say, let's take regular consulting charges, 10% you deduct and make. So very simple, 1 lakh, 10%, apply, deduct, pay the remaining to the recipient. So coming to, and once you determine all those parameters, then the question could arise, am I liable to deduct? Should I also deduct tax? I am doing a businessman, I am a small businessman, I am a big businessman, I do so much amount of stuff. How do I know whether I am also liable to deduct? Liable to deduct tax. So the general provisions is any person making a payment. So all persons making any payment, all persons making payment or have the responsibility to deduct tax. So it can be an individual, it can be a partnership firm, it can be a company, it can be a trust society. Everyone are governed by the provisions of tax deduction at source, and everyone is expected to deduct tax. However, in most of the sections pertaining to TDS, the particular section itself gives an exception, and mostly it is an exception given to individuals or HUF who carry on the business and whose turnover has not exceeded 1 crore, or in the case of professions whose turnover is has not exceeded 50 lakhs. Or in other words, any person carrying on business or any individual carrying on business whose turnover is less than or does not cross 1 crore, then he does not have to deduct TDS. In the case of professionals, consultants, so doctors, engineers, chartered accountants, 50 lakhs is the limit. If their turnover or the gross receipt is less than or equal to 50 lakhs, then they are not required to deduct TDS. We need to be very extremely careful in this. In the sense, this is applicable only to an individual and HUF. Let's, for simplicity, consider only individuals, because mostly HUF we are not. Companies, any amount they are liable. Firm, any amount, there is no criteria. Any amount they are liable to deduct TDS, and all other forms of business, they are liable to deduct TDS. Okay, now we have determined what are all the items on which payments on which TDS is to be deducted, and then we know if we are responsible, and suppose we are responsible, where do we start? The first and the foremost is you need to have a TAN number. What is that? TDS and TCS collection account number. That is tax deduction at source or tax collection at source account number. It's called TAN. And how do you get it? You apply under Form 49B and you get the TAN number. That becomes the first step when you are liable to deduct tax, to get a TAN number. To get a TAN number, of course, you need to have a PAN number. Let's assume that you are all business person, and then you have the PAN number with you. Get a TAN number, and then go ahead and start doing the deductions or deduct taxes as and when a payment or credit is done. So, as per the Income Tax Act, there are the section 192 to 196D talks about TDS. Why am I mentioning about the sections? Normally, I don't do it in these kind of sessions. The reason is, and when it comes to TDS or TCS, when you fill a challan for the remittances of TDS, you are always required to mention under what the nature of payment on which a tax is deducted. We'll look at Form 2, the challan 281. I'll just show you. So there you are required to know under what section or what is the nature of payment that you have done, and you'll have to mention that. So that's the reason I have mentioned the section numbers. So section 192, it starts with salaries, and 196, it goes to payments to NRIs, non-residents, not NRIs, non-residents. So we'll be touching upon all those important sections that talks about TDS. So I made the, as and when I make a payment or credit, I have deducted TDS. Then what next? You are required to remit this amount to the government. See, one thing we'll have to remember is whatever tax we have collected, whatever tax we have deducted, it pertains to the government. So we are not supposed to hold the money of the government. So we will have to remit them into the account. So what is that? You will have to remit within a specified date. What is a specified date? We'll look later. And you will have to remit in by using a challan called challan 281, where you will mention the assessment year, you will mention the nature of payment, you will mention the amount, and then you will sign. For the challan 281, TAN number is mandatory, and you will have to quote the correct TAN number. Even incorrect quoting of TAN number could result in charge of penalty. So you remit the amount within a specified date. Then what do? You go and then file the return. So I deduct tax, I put all together and then go and remit that amount to the account of the government. Then what I do? I file a return, which is a quarterly return. In that return, I say, okay, I have collected from A, I have collected from B, I have deducted from C, I have deducted from D. and these are the PAN numbers of that ABCD, and this is the nature of payment that I have made. Those things is submitted in a return which is filed quarterly. And the next step, which is also the final step, is where you issue a certificate. What is that? You issue a certificate in two forms, either Form 16 or Form 16A. Form 16 is issued for salaries and Form 16A is issued for other than salaries, where this certificate will contain information of what is the PAN number, the PAN number of the recipient, the nature of the payment, the amount of income or the amount of payment, then the tax that is deducted, what is how much, when was the tax deposited, where was the tax deposited, all those information is there in the certificate. So why is the certificate required to be issued? The recipient, based on this certificate, he will file his income statement of income. Particularly in all other cases other than salary, it's going to be very simple. I know that if it is going to be 194J, so much amount and the tax. But when it comes to Form 16, which is salaries, all the details in terms of breakup of salaries, the basic, HRA, the other components, your Chapter 60 deductions, which is your investment or any other deductions, so total tax liability, and how it has been spread over the month, all those information are available in Form 16, which is required for the recipient, that is the employee in the case of salaries, to file his income tax return. Okay, so now we saw three components: remittance. We saw remittance, then we saw a filing of statement, then we saw issue of certificate. So remittance, when should you remit? In all cases, it is within 7 days from the end of the month in tax is deducted. So we are currently in November. If we deduct tax in November, we have to remit the money by 7th of December. There is an exception to this. In whatever deduction you make in the month of March, you have time till 30th of April. Why? The reason is obvious. March is the month where it's an year ending, and we are more likely to make a lot of provisions and taxes to be deducted on that as well. So the time is given up till 30th of April to remit the money for those payments on which TDS is deducted in the month of March. Quarterly filing of statement. So there are every quarter you will file the statement, which is essentially a summary of, rather details of all the deductions that has been made, the name of the party from whom the deduction has made, and the nature of payment. So that is filed quarterly. There are forms again. Salary is filed in a form statement called 24Q. Other are paid in all other payments is 26Q. When you make a payment to non-residents, it is 27Q. And when should you file this? For the quarter ending 30th of June, you'll file by 31st of July. For a quarter ending 30th of September, 31st of October, 31st of December, you'll file by 31st of Jan. For the quarter, or for that matter, the year ending 31st of March, you have time till 31st of May, 2 months time. The reason again, as I told you, 31st of March, you will make a lot of provisions. Tax TDS is payable on provisions as well, because it becomes a credit to the party. Payment or credit, whichever is earlier. So by virtue of you making a provision, say for suppose you make a provision for rent payable, interest payable, or for that matter, consultancy charges payable on 31st of March. Remember, tax has to be deducted on that amount and paid. You would have not paid that money on 31st of March. You are just making a provision for that and crediting that party on 31st of March. But still, you will have to deduct TDS, and that TDS portion has to be remitted. Because you do it on provisions and you need time to finalize your books of accounts, time is given till 31st of May to file the statement of the last quarter alone. Then the third step I told you was issuance of certificate. When it comes to salaries, you issue Form 16. The due date for that is 15th June. In all other cases, you issue Form 16A. The due date is 15 days from the due date for filing the quarterly return. So what does it mean? For the first quarter, you have time till 31st of July to file the quarterly return. That is this one. Then 15 days from that, that will be 15th of August. So you will similarly for all other quarters, it will be 15th of November or 15th of January or then 15th of May. So that is how Form 16, that is the due date for Form 16A. 16 is salary, 16 is very simple, 15th of June. Reason again, salaried people, only salaried people will have the due date to file their return by 31st of July. So you will have to necessarily issue the Form 16 by 15th of June so that they know the details on which they will have to file. Okay, now let's go to specific deductions. The first specific deduction that we are going to talk about, that is what we are going to talk about in this section, will be salaries. So what are the parameters you need to consider when you make payment to salary? First is this section, as I told you, why you need to remember, because of the challan, section 192. There will be a code which will be 92A. So then who's liable to deduct TDS on salary? An employer, a person who employs the person, employer, and all person, any person who employs. It can be a businessman, it can be an individual, it can be anyone who is employing, and if he pays a salary which is taxable as per the Income Tax Act, if it crosses the basic exemption limit of 2,50,000, he has to determine what is the taxable or tax amount, and then he has to deduct the tax. So payer is employer. Who is the recipient? Obviously, it is the employee. No much discussion is required. When at the time of payment, so the day when the salary is paid, TDS has to be deducted. What is the amount? This is very different. The salary is very different from other provisions, which we will see in the subsequent slide. But to begin with, the amount will be the estimated amount, and the amount of income on which tax has to be calculated should be the estimated amount, and the tax will be deducted at an average, which means it will be spread across evenly over the months on which he is getting salary. This is very much different from all other payments. In all payments, you will actually deduct TDS as a portion on the actual amount that is paid or credited. 1 lakh is the amount that you pay on account of rent, 10%, 10,000, simple. Rate is specified, I said 10%, that is also simple. And in all cases, you don't have to add up surcharge and cess. But when it comes to salary, it's different. First and foremost, you'll have to make an estimate. Then you will have to take an average. So the tax, I estimate taxable income of which the tax portion comes to say 1,20,000 rupees. Then an average of 1,20,000 is what? 1,20,000 divided by 12 months is 10,000 rupees. So I will have to deduct 10,000 rupees every month. That is average. In salaries, you will have to add your surcharge and cess if it is applicable to the tax liability aspect. Whereas in all other cases, you will not add surcharge. If it is 10%, you are going to deduct only 10%. However, when it comes to salaries, compute the total tax liability, then add the surcharge and cess. That portion is divided by the number of months and deducted. So, because this is an estimate, we need to pay a little more attention on how do you estimate. First and foremost, the estimate has to be honest. What does it mean? You take all those parameters into consideration while determining the total salary that you would pay for the entire period of an year. So suppose, why we say honest estimate is, suppose the employer knows he's going to go an increment 2 months down the line, which will be applicable, which will be for the rest of the year. So that has to be taken into consideration. Suppose the employer determines a certain amount will be paid as bonus. That has to be taken into consideration. So an entire estimate has to be made, and then on that, a deductions has to be allowed. But more so, you'll have to examine the allowability of deduction. What does it mean? There are various deductions that an employee will be availing. The most important is the Chapter 6A deductions, which is on your investment. So the employer has to take all precautions, all efforts to ensure that the employee is has made the right deductions or claimed the right deductions, provided the right set of documents, ensure that it is correct before allowing that deduction. Because always remember, the onus of proof is on the employer. When an assessment of tax deduction at source, TDS, happens, the assessing officer is going to see if the employer has taken all the provisions of the Act to ensure that he has corrected the right amount of tax from the employee. So the employer has to prove, yes, I have taken the I have done the due diligence, I have taken all precautions to ensure that this is the salary of the employee, these are the deductions, and I have taken all the documents from him. And that is why the employer is expected to retain all these documents. He will not be filing it anyway unless he is called for. So retain all the proofs of the documents that the employee submits towards deduction. And to facilitate this is what is Form 12BB, where the employer collects the information at the beginning of the year from the employees as to, okay, what are all your deductions. So we'll also look at that Form 12B, what are the components of Form 12BB. First and foremost, HRA. So when it comes to HRA, the employer is expected to collect the name, address of the landlord to whom the employee pays the rent. Very important, if the total rent paid during the year crosses 1 lakh rupees, the PAN number of the landlord is required. So the employer has to collect that. When it comes to LTA, LTA is very sensitive. So the employer has to collect evidence of all the expenditure that is paid and determine the eligibility of LTA and keep it on record. Third one is interest from house property. So suppose the employee claims that he has paid interest on his home loan, you will have to collect the name, address, and PAN number of the lender. Obviously, the certificate that is given by the bankers will have it, but it is the responsibility of the employer to collect this. Then Chapter 6A deduction, the employer should take the proof of all the investments that has been made by the employee before allowing the Chapter 6A deduction. For instance, if he has paid the LIC premium or insurance premium, collect the insurance premium. If he has made payments towards the tuition fees, which is eligible for claim, get that. So all those things he has to collect and determine what is the tax liability of the employee. So there are few challenges which you need to keep in mind when it comes to deducting tax as far as salaries is concerned. Salaries from more than one employer. Today we are talking about moonlighting as a very normal concept. But there are generally two possibilities when there can be salaries from more than one employer. One is simultaneous employment. That's very much happening in most of the tech world today. Take up two employment at the same time, and there is a possibility that they will get salaries from more than one employer. But a very common one is when a person joins newly to our organization. So a person joins in the mid of the year, he takes up employment. That is change in employment. These are the scenarios where there is a possibility of salary coming from two employers, or rather more than one employer. So now, what do you do as an employer? So here, the employee may furnish, which means it is not mandatory on the part of the employee to furnish, or it is again not mandatory on the part of the employer to force him to give the information. But if the employee provides that information, so you collect that as an employer, collect that information in Form 12B. If the employer provides that information, take that also into consideration to determine the total tax liability, and salary for the subsequent month will be deducted accordingly. The other one is other income. So suppose the employee gets income from other sources. What are that other sources? Possible that he has income from house property, he has let us house for rent, he has income out of it. Possible that he has interest income from his fixed deposits. There's possible that he gets dividends from his investments. There's also possible that he makes some other income. So again, there the employee may furnish. So if the employee, again the employee is not compelled to furnish. If the employer cannot say, no, I know that you have other income, give me that information. The employer is not required to do that. But if the employee provides that information, the employer shall take into consideration those other income and compute the income tax accordingly, and then deduct tax on an average basis. So remember, the employee is not required to furnish, but the employee may choose to do so. Employer again should not compel the employee to do that. But if the employee on his own comes and provides that information, it is the responsibility of the employer to take that income also into consideration and compute the total tax payable by the employee. The other one is the loss. So suppose the employee comes and says, I have another business and I have incurred a loss. Or I got into speculation, I incurred a loss. I sold a property, I have incurred a loss. Can should the employer take those loss into consideration for determining the tax liability? The answer is no. When it comes to loss, the employer should not take those loss into consideration for calculating the tax liability from salary. There is only one exception, that is house property. Suppose the taxpayer comes in, the employee comes and says, I have a loss from house property, and he provides the interest statement, then up to a maximum of 2 lakhs can be considered, and that can be set off against or reduced against the tax liability from salary, and tax can be computed. So this is the only option. Other income, any other loss should not be considered by the employer. I told you tax will be paid on the total tax liability will be determined based on the slab that is applicable, and average will be deducted. Suppose the employee does not give the employer PAN. So in that case, what will happen is 20% or the rate whatever is applicable, whichever is higher is liable. What does it mean? Suppose the average tax for a person or the employee comes to 10%. Probably that is because he is in the 10% slab, where he has not provided PAN number. Then 20% has to be deducted. On the other hand, by computation, the average the tax rate that is payable by the employee comes to 30%. Then what happens? 30% or 20%, whichever is higher. So tax has to be deducted at 30%. So this again has to be kept in mind. Okay. See, there is a new regime 15 BAC where the employee has an option, or for that matter, any individual has an option where he can select for the new regime, which is a tax slab rate, which the taxpayer has a different rate for different slab and different rate of tax applicable. Can the employee opt for new regime? So if suppose an employee comes and says, no, I would like to avail the 15 BAC, the new regime, tax under new regime, is the employer bound to take it into consideration? The answer is yes. Suppose the employee, however, as an employer, take it in writing and then deduct tax computed as per the new regime, 15 BAC, and the employer can deduct tax accordingly. Now, there could be another question, though I have not mentioned here. Suppose the employee says that no, deduct TDS under the new regime. Can the employee change it to a regular scheme of assessment when he files a return? The answer again is yes. Just because he has given a declaration here and tax has been deducted under new regime, it is not mandatory for him to go and file under the new regime, and it is not also obligatory on the part of the employer to ensure that because I have deducted TDS under the new regime, the employee should file the return under new regime. If the employee gives an underwriting that it can be deducted under new regime, the tax has to be computed accordingly and then deducted on an average rate. So adjustments, what are adjustments? As I told you, the estimate has to be honest, the deduction has to be average. So what happens normally when because of this or for other reasons also, salary increment or a loss of pay, there could be a possibility that the total tax liability increases or decreases. Or for that matter, I also genuinely believe in certain deduction, but that's not there. So there is an adjustment that needs to be done. What is an adjustment? Either I need to increase the amount of TDS to be deducted subsequent months, or it could be otherwise also. I need to reduce the amount of TDS in subsequent months. So that is possible. Only thing when that is happening, you should be extra careful to ensure that you have done the assessment or taken the new deductions or claims genuinely and then ascertain the tax liability. Always keep in mind when adjustments are done in the last quarter or in the last month, it attracts the eyes of the assessing officer. So assessing officer, most likely you will get a notice from the assessing officer saying that please provide the details of all the tax deduction at source or collection at source and look at those things. Particularly this will happen in the case of salary. So be extremely careful when you determine the estimate and the average. So the last question is, can the employer and employee agree to not deduct TDS? So can the employee say, okay, I'll give you an underwriting or even I'll give you a writing in bond paper and I'll take the responsibility. Employer, please don't deduct TDS. That's not acceptable. Even any agreement cannot override the provisions of the law. So the employer is bound to deduct TDS as per the provisions of Income Tax Act. So with that question, I think I'm coming to the end of the session. So remember, TDS is not TDS in the sense if you understand TDS properly, it becomes a very easy task to do. However, a very essential part of the income tax compliance. Thank you for patiently listening to me. I'm opening the session to questions. Please unmute yourself. If you have questions, please unmute yourself and you can ask your question.
I think there are no questions.
Yeah, either they have understood or completely not understood.
You can tell them the plan. What will be the future programs?
All right.
Yes.
So this is what we plan to. As I told you, the salary and we have discussed only one payment, that is salary. The subsequent sessions we will talk about other payments which are critical, which are normally undertaken by business people, which will be, as I told you, payment on account of professional services, payment on account of contractual services, payment of rent, interest. So we'll talk about various tedious provisions. What happens? How do you go about detecting? How do you remit them? All those things again. Then we will also touch upon TCS. So my estimate is that another 2 sessions should cover the remaining portions of TDS and a little bit of TCS. If need be, we will extend it to the 4th session. So for now, we have planned it as a 3-session series. And in case you need any specific provisions to be discussed, you can feel free to write to us or send an email to the person in charge for the registration of this session, and we will take that session also and those provisions also and discuss. Also, we can do that you can, in case subsequently after this session you have any questions that but that does not stop you from asking questions now. So please feel free to ask questions if you have any.
Then we can close.
Somebody has a chat. Let me see. Sir, are you covering 194Q? Yes, of course, I will be covering 194Q because one is very important. The other one is relatively new. We will be covering 194Q. Looks like there are no questions. Please, you can also leave us a feedback on how the session went because nobody is opening up. So again, thank you all and have a very good evening. Thanks.